Hi guys, today we are covering the state of Kenyan economy, a brief summary of all the aspects, especially the key macro factors driving the Kenyan economy. And we touched on the basics of investing in Kenya, from bonds to NSC, as well as, of course, the impact of taxes, employment and labor situation in Kenya. And we hope that this conversation will be quite illuminating, even though short. Tune in. I'm sure you'll learn one or two things. Hey guys, I hope you're doing well wherever you are. Rufus, how are you?
I'm doing fine.
Yeah.
Welcome back.
Thank you. It was a short hiatus, a trip to globetrotting round this East African nation. I believe it's a federation, or should we call it nation? Yeah, but it was a nice, relaxing trip.
Yeah.
And I went offline, and I remember the first thing I saw when I switched my phone on was, of course, from the last time we were here. Sadly, there is still, of course, the ongoing crisis in the Middle East.
Yeah.
Hopefully, soberness resumes and no more lives are lost, basically.
Definitely. We ask for peace.
Yeah. Anyway, markets have been crazy.
Yes.
So
Did you find them where you left them?
I found them worse. It's a good thing I closed all my positions and decided, let me delete all the MT4, MT5s and the delete X. So when I came back, we left gold at barely 1900s. We are now almost at 2000s.
Yeah.
So, and I'm sure if the things go the way they are going, we are definitely going back up there. I think we can confidently say that the dollar exchange rate is at 150 plus.
Yes. I think that has been the heartbreaking story in the entire country.
Yeah. And I don't know, maybe by next week, by the end of this month, let's say by Christmas, we might be dealing with 160.
Yes, there's that possibility. The problem is if the currency is weakening by that rate, roughly 2.3% per month, it doesn't maintain the same stable depreciation rate. At some point, investors start panicking. And when that panic happens, it has the overall effect of accelerating and maybe turning from a straightforward curve to maybe a faster curve.
You remember when our chief market analyst, said that the dollar would be 100?
Yeah, he even gave a fair warning. If you're holding dollars, you should sell them or else you get some losses.
For those who don't know, you might want to go back to, I think it was episode 3, when we were talking about the Kenyan economy.
Yeah, I remember that period of time when, to put this in perspective, our president and deputy, they basically, I think it was the same week where they had the government-to-government deal with Saudi Arabia to get oil on credit. And he issued a fair warning that the Kenya shilling was headed back to 120.
Yeah.
But for anyone who listened and acted on that information, they should probably fight back.
Well, that would be a long shot. For me, it's a long, how do I put it? This crisis is not just recently.
Yes.
I think if we are actually to trace its origins, it has some roots or some, snowballs effect from whatever Fed did way after the global financial crisis, the low interest rate environment. So people could access a lot of money. Dollars was moving around. Most hedge funds were putting money in the emerging market. So they would say, let us put in this government bond. They have floated. Why not? They are looking solid. They have a democratic electoral processes. And they have just risen from a very deadly post-election violence. So I think most global investors who put in money to Kenya at the time really propped up the Kenya shilling at the time at 108. And so the forex inflow
Yes.
was significant. You not only are getting a lot of money at very low interest rate, but you are getting it from everywhere.
Yes.
So by the time I've had this debate or allegations, or let's say statement. It's not an allegation, actually. It's a factual statement from the CBK governor that maybe it was, artificially, maintained.
Yes.
But I think besides the artificial maybe effect or policies, then there is that fact that there were a lot of effects coming into the country from different sources.
Yeah, but you see, like all central banks do the same. They always artificially manipulate their currencies to their desired levels. And early this morning, we heard the Bank of Japan intervening in the currency market after USD JPY hit 150. So I don't think that is something that is new or crazy, but all central banks tend to participate to support their currencies.
Okay.
But then, personally, I trace it back to early 2020. I remember in early 2020, I had like big goals, big plans around January. Didn't know COVID was about the corner. So during that period, the Kenya shilling was trading at 99.5 against the dollar. So if you now compare with the current rate, which is 150, and now if you go to the private sector, forex bureaus and banks, they're currently doing 156 to 160, and it's really tough on everyone. So it basically means that since 2020, our currency has lost over 50% of its value. And that basically means that for a person who was spending Kenya shillings to buy imports, be it cars or goods, if they were spending 100 bob to get $1, now they're spending somewhere between 156 and 160. And that has the overall effect of being pushed down to the final consumer.
Interesting that you say that. You said 2020. There's a book I came across recently by... We haven't really given out book suggestions in a while. By Betty McLean and John O'Gara, The Big Fail. They document just before... COVID-19 started at around... It's literally COVID-19, December 2019. So when it started, it was just rumors everywhere. And people were like, it is just a flu, it will pass. And I think, like you said, it was played under, or maybe manually or artificially played under to not create panic. But already, like you said, the economy was starting to show some cracks and some signs of depreciations. Going forward, recently, I think as of today, I think Safaricom shares is trading as 12 bob.
Yeah. Did you get out?
Man, I am still in. And I am reeling because I said, okay, value investing is finding very good companies and buying it at an affordable price, right? So I try to say, okay, let me have some faith in Safaricom as a company because, everyone buys their bundles. They are the largest distributor of internet in Kenya. So it just makes sense. But I don't know what is happening. It seems like foreign investors don't just have so much faith in it. And them pulling out is definitely doing a number on their dividend payouts and all that cash they're losing from that. So there is that dark cloud around their...
Yeah, with the Kenya shilling being down, 22% since the beginning of the year. Then, let's say you are a foreigner, you are holding some Safaricom shares, then they're down 45%. So when you add that multiple with the currency losses, then it gets even worse. So for any foreign investor that is still holding on to Safaricom shares, they are better off if they invested somewhere else, or if they hold the book losses and then wait until the economy recovers.
Which will that will mean if they do not have obligations to, maybe if they are not a fund manager, because those ones are the ones who will feel the pinch, because at the end of the year you need to tell your investors, so here is your dividend and this is how we perform. But if you don't have that obligations, you can hold. But those who can, not sitting pretty.
The problem is while you are looking at the history and what happened with Safaricom shares, basically dropping from 46 bob down to 12 bob. If you're still holding on to that share, you're hoping that at some point in future, this company will start recovering. There will be renewed confidence in the economy, the consumers will get stronger and so on. But then from what we are seeing with this current administration, rising taxes, rising cost of fuel, rising cost of electricity. What do you think the outlook is?
It begs the question, when things are tough, is it right to invest or hold on to cash? Because everything sounds negative and you are trying to, let's say, find some slippery of hope, something to keep you moving, because you can't say that you have some money and then you don't know what that you can do that can sort of cushion you against something in the future, something like that.
There's this very common saying from your favorite guy, Warren Buffett, that if everyone is afraid, be greedy, and if everyone is greedy, be fearful. That only applies in good quality companies operating in a good economic environment. So, when we think about, let's say, price to earnings ratio, when you find a company that has a really low price to earnings ratio, it may at first seem like a value play, but then on the other hand, it could be a company that is really going down. So as for Safaricom, I don't think it's really going down. It has significantly maintained its revenues and profit margins.
Yeah.
But then from the economic environment perspective, we are seeing Kenyans suffering more and more because they have to spend more and more of their income on the same number of goods and services, mainly because the cash shilling is losing, and they have less and less money to spend on other products. And I think that's what is generally hurting the NSE shares.
I think for a company like Safaricom, they suffer from the risk of revenue risk, whereby if you are using maybe their bundles, they have like 3 bundle structures, right?
Yeah.
You might want to maybe, instead of having, let's say, the 10,000 one, you go down to the 5,000, and then you wait and see how the economy affects your pocket, and then maybe if it doesn't really significantly affect it, you can proceed to the next. The other one, I think you had mentioned it some time back, if you are making phone calls, you might decide that this time round, let me do a WhatsApp call, because I'm better off paying maybe 100 shillings for unlimited, let's say, data bundle for the day, and make numerous multiple hours of calls while not going the voice way. So I think definitely that is a revenue aspect I would be looking at as a Safaricom investor, to see if it will suffer a shock, and therefore, of course, the profits that will be given out there. But it's a very interesting time because everything is sort of gloomy. You read in the newspapers, like today's newspaper, the entire week's newspaper is just, let's say, how do we put it? Targets on somebody, and nothing positive that can be of value to you and not depressing to you.
Yeah, for instance, today, being the Wednesday, 26th of October, the top headline on Business Daily is that the Kenya Shilling, the value of 1,000 shillings, has lost its power down to 850 within a year.
Yeah,
that's the top news. Second article I saw today was retail investors dump shares and pump 174 billion in government debt. So you see that kind of rotation. When people are not generally confident about the economy, they will tend to go for risk-off assets rather than risk-on assets. So in this case, even if Safaricom shares are that cheap, and people can actually see 12 Bob as a really good value play for Safaricom, but instead they are definitely going for bonds, mainly because they are afraid of the projections for the current economic environment.
Yeah, interesting that you mentioned bonds. I believe for those who have been following, they have listened to the bonds episode, there was a discussion I saw recently. There are investors who have held bonds since 2010, when the rates were around, I think, 8, 6, they are about. In the secondary markets, they are really losing their money, set aside even inflation. So there are a lot of Kenyans out here who invested very early in the government bonds, but they are just holding paper losses. And it's actually very sad because the recently floated infrastructure bond, which I'm very confident will be oversubscribed for some reason, like the June offer, is the one which is sort of the talk of the town. But if you do an analysis of all the other factors or asset classes of investments, plus the ongoing crisis in Kenya of lands, which is, we talked about the dead asset allocation as well. Everything is sort of risk on, basically. So you wonder, you're better off putting your cash under the mattress and hoping flood never carries your home, or a bulldozer comes to your home,
I was recently in a social setting having a conversation with their peers.
Yeah.
And one of them asked us, do you know anyone who is constructing a house? And I thought about my friends and I couldn't find any. So normally, like on a typical day, over the last couple of years, I would just point out, this so-and-so is building, so is constructing.
Yeah.
Right now, things have really slowed down. And
that is very true.
I think that's a bad indicator for the economy.
I think we should have something like that because we normally get the US building permits and everything.
Yeah.
In Kenya, it's very hard to know the number of constructions which are going on, especially for residentials, not the commercial buildings, because that will be an indication of either people have expendable income so they can maybe build something from themselves, or maybe there is actually a demand for housing that it can be a good business or a good safe haven or a safe net for you.
Yeah.
So it's actually a very interesting time. Talking of bonds and the economy of Kenya and everything, what is your view of the number of floated bonds in Kenya? Is it that the government has too much appetite, or it's actually something very attractive for investors? Because we are in finance, you get asked this question, where should I invest? And you're like, it's a very easy and hard question because obviously bonds are safe. But then again, the losses people are crying out there.
Are you really sure they're safe? So I think the government has like too much appetite for debt. I think in traditional settings, if you look at Kibaki era, there was always this fine line between borrowing from excess cash that is usually available on institutions, mainly borrowing from pension funds, borrowing from insurance companies, borrowing from banks, maybe SACCOs and microfinance institutions. But now, if you have the average guy, the Buddha guy investing in the bonds, then that's a real indicator. It's a real problem.
Yeah.
So when the government is borrowing 50K, it's borrowing 10K from the average guy, how much do you think is ending up in investments in the private sector or the informal sector? So, for instance, this headline from Business Daily, retail investors have pumped 174 billion shillings. This is money that, if it had not ended up with the government, would have either ended up in three things. One, people could have spent this money, and this would have spiked demand across the economy. They could have invested this money in production, and this would enhance more economic growth. And at the same time, let's say they put this money in savings in a bank or a SACCO or so on. And then the bank would allocate this money to people in need of loans, and perhaps you could see some further economic growth. But then when everyone is panicking and pushing their money to the government, and the government is not doing any kind of investment, it's just spending the money, then gets really bad. The outlook doesn't look so glossy for Kenyans.
Yeah, I'm going through the CBK website and we are talking about bonds, but there is the short-term credit where the government comes to the public to seek some funding.
Yeah.
People are increasingly favoring the 91 days.
Yes.
Because it usually has almost 300+% subscription.
Yeah.
People are better off waiting after 3 months. Let's see what happens.
Yeah.
If it is good, let's try another 3 months.
Yeah.
If it's good, let's try another 3 months. But rarely do we see people going for even more than, let's say, 2 years. And I think that's worrying because if that is the case, it means the government will have a lot of, how do we put it, payment obligations within a short period of time, which technically economy doesn't produce at that fast of a rate.
Yeah.
And it's not like people have a lot of, extra income to spend in, let's say, in VAT that can give the government some cash to pay out all these investors.
Yeah, but then I'm looking at a list of bond yields for the Kenyan market, and the yield curve has not inverted yet in Kenya. So it means that a majority of the money is still ending up in the longer term bonds rather than the shorter term ones.
Okay.
For instance, the highest in Kenya is the 25-year. So the 25-year bond is currently yielding at 17.024%. But then, if you go to the 10-year bond, it's 16.832. If you go to 1-year bond, it's 15.34. 3-month bond is 15.046. So it basically means that a lot of investors are still inclined to invest long-term in Kenyan bonds rather than short term.
Remember when we talked about banks, US banks early in the year?
Yes.
I don't know if you saw this headline recently. The CBK pushed in almost 100 billion shillings because there's a liquidity issues in banks.
Yes.
And who is the major investors in those long-term bonds?
Yeah, it's the banks.
Banks, insurance, and the rest, yeah? So should there be, I don't want to put it like a bank run, a demand of cash because, life is becoming expensive. So you're not really saving a lot.
Yeah.
You're just holding cash there until some cloudy, rainy day hits you.
Yeah.
I think that is the risk that I'm looking at, whereby, yes, the yields are not inverted, but the unrealized losses, especially the ones who bought, like I said, at lower rates.
So what was actually happening during COVID 2020 through to 2022, these commercial banks in Kenya had excess cash, and they had to find a way of releasing this cash either to the economy or investing it. So since they could not invest in businesses that were not fully operational, they chose either of two ways. One, they started lending this cash to individuals through mobile apps. This is the period where almost all Kenyan banks launched their own apps, where they lend directly to individuals for a very short period at a very high interest rate. And also they pushed out of this money in government bonds, especially the infrastructure bond. So right now that the yields have kept on increasing, now they are holding book losses on the cash value of these bonds. So that led to the report we saw 3 months ago, where the central bank said a couple of banks were stable, and at some point, the central bank governor had to inject some money, liquidity, to make sure that these banks are stable. So far, what we are seeing is that when these banks realize that they are holding real bad debts real bad losses in these bonds, then they want to maintain a stable financial position. And in order to do that, they have to cut lending to the economy. So right now, from what we are seeing across board, is more and more commercial banks announcing that they're increasing the interest rates. We're also seeing a trend where there is more and more non-performing loans. And this is still like one cog in a bigger engine. There's more factors contributing to the current weakness we are seeing.
I know in this, the discussion right now everywhere is obviously the state of Kenyan economy. And in our 30 minutes, we definitely cannot cover everything, but we'll definitely highlight the most key important factors or drivers of the Kenyan economy. You talked earlier about taxes, and I think there are a lot of taxes until I think I've lost count of them. You just know that there is some tax you need to pay. Good. Have you paid it? Okay, thank you. Next. Are you feeling like, or I know you wrote it recently, that it's becoming too much and coming too fast for the average, let's say, income earner to keep up and adjust his own household budget, or even companies to adjust their own, budgetary allocation, maybe for hiring or maybe further investments. KRA recently announced maybe a miss of H1 revenue collection by 79 billion, which I don't think is that big of a miss. But the worrying thing is maybe from the reasons given, whereby maybe remittance of pay and the rest. That is where maybe I was like, that is a cause for worry, because if government can't pay government. So what says the rest, Do you think maybe in the next 6 months or even 12 months or 18 months, things will sort of stabilize and people will sort of adjust how they live?
Well, from what I'm seeing, it's a lot of exits happening across different industries. For any business, I think it's proper to talk about businesses because they create the second largest employment besides the government. So the government pays its employees from taxes. But then for businesses, they pay from their sales revenue and profits that they make. So when you see these taxes increasing, and for every tax that applies to a business, they have to cover it on their side. So if the government is hiking, let's say, housing levy, the business is also covering on its side, which is an extra expense on the business. So businesses prefer operating in an environment where the tax rate is predictable. you can have, let's say, a 5-year plan. Government saying that the taxes applying to these businesses in this sector are expected to range within this limit over the next 5 years. So in that case, businesses are able to plan forward that these are our projected revenues, we'll be able to pay these taxes, and we'll be able to survive and make something out of this business. But then, if the government just increases this tax, tomorrow this other tax, the other day this other tax, and every day you wake up, you read the newspaper, you just want to tear it down because of taxes, then it becomes a really harsh environment for businesses. Okay. So the overall reaction that you see in the market is these businesses trying to survive and starting to cut jobs because it's becoming a bigger expense.
Oh, that is a fair point. Yeah. What of the other side? I think we have seen on the medias, there is a lot of cash coming into Kenya for different investment purposes. I think there's a government deal with Huawei for ICT.
Yeah.
There is the one we covered for Africa Climate Summit, among other investment agreements or deals that we have had so far.
Yeah.
Do you think this positive cash agreement for development should spur the Kenyan economy to some degree, because I think the anticipated growth of Kenyan government is around 5.1, I think, based on the last KIPRA and KNBS data.
I would like to refer you to what we call the housing market indicators. So, for instance, when we are studying the U.S. housing market, there's a couple of indicators we watch. The first one is building permits. So this refers to the number of people who have applied for permits to do construction within their area. So when you track this data, you are basically tracking the climate in that economy. So if the climate is positive or optimistic, then you'll see more and more people applying for building permits. But that doesn't imply construction. So we go forward and now start focusing on housing starts, the number of housing units that were started in terms of construction within the last 1 month. So the same case applies to these big deals are currently being announced. So the deals are synonymous to the building permits or applications, people who are currently interested in investing in Kenya. But then if you actually track the real amount of dollars flowing in, that's a completely different package. So until we see these projects that are being announced starting being implemented in Kenya, so far I would just call it just talk. It's just the air, you're not seeing the substance.
Okay. A bit harsh, but okay. Now, NFP, Kenya, we normally don't have the non-farm payrolls and everything. But we, in line with companies shutting down, perhaps... is it that it is realigning the labor space in Kenya? Because I know most Kenyans will relate to this. There are a lot of Kenyans moving away from Kenya for whatever reason, looking for, let's say, greener pastures. Is that a cause to worry? Because definitely if this guy goes, there is very little chance he will, once he arrives, maybe within a year, he might not be that liquid to be sending back some dollars or some dirham or some renminbi or some rupee or whichever. Is that a cause to worry? Because I think Kenya is a labor-driven economy, whereby we are the ones who we are hustlers basically. We are always around doing something, 3 or 4 jobs at a time. Do you think that's a cause of worry, especially people going of high quality either skill or professions?
I think it's a big challenge, especially considering that currently it's government policy to process as many passports as possible and allow people to travel the world and go work in other jurisdictions. We have seen our president announcing deals with Qatar, among other countries, to allow people to work in those areas. So while in the long run, it might be beneficial for Kenyans as we get more dollars from exporting labor, the problem is our top professionals are the ones we are exporting. Like if Canada was to accept 100,000 Kenyans, they wouldn't just accept 100,000 Kenyans. There will be a rigorous process. It's looking for people with the highest skill, most determined, people of high productivity will be admitted first. So in that case, it basically means that we will be left with less and less professionals within the economy, and that's bad for us. Case in point, if you look at the nursing sector, every nurse in Kenya, almost everyone, is doing those exams to just go and work in the UK, the US, and other countries.
Yes.
And where does that leave us as a country? Are we going to have a shortage of nurses in the next, let's say, 1 or 2 years?
Before we wrap it up, on the flip side, doesn't it do the opposite, whereby it reduces the number of dependents so that people who go, you have maybe, if you are a family of 5, 2 of you are in wherever they have gone, right?
Yeah.
So 3 are remaining. Yeah. So you don't have to take care of this one, despite the funds that you have allocated for those 2 who have gone. You know that's an investment that will give back in return. But in general, the nation is reducing the number of people, the government or the economy at large expects when we are announced maybe for a job vacancy.
Well, mostly, if you think of dependents, dependents are usually either elderly people who cannot work or children. But anyone who is, let's say, youthful, they are most probably doing something. And if they are not doing something in terms of production, they are doing something in terms of consumption. So you are as much important member of society being a consumer as much as you are a producer. So as long as there's more youths in Kenya and every day they have to eat, they have to dress, they have to seek entertainment, that they have to seek housing, medical care, that creates demand in the economy, which is very important for production.
Well, at least we have expressway, so
yeah.
Kenya is not doing that bad.
Get them out faster.
We can move faster. I think, like I said, it's the state of Kenyan economy is too. It is how it is, depending on how you view it. Yeah. Hopefully, things will be better, and of course, we hope for those who have questions and comments, feel free to share them. We will try to share some of the reference points that we have just talked about. I would encourage, as we continue with this podcast, I prefer, if you want references, just check on our Twitter handles or X handles, because most of the information we share from CBK or any other source the links will always be on our handles, so that you can be able to easily reference and read for yourself and make at least your own opinion out of it. Any closing remarks?
Well, if you can earn in dollars and spend in shillings, that's the way to go.
Yeah, true. True. So right now is the best to stack up a lot of dollars, and I think that can go a long way. It's not an advice, but if you think it is, maybe.
Well, if you've been earning in cash shillings since 2020, your salary is down.
Definitely.
Really down.
Definitely. The net income.
Yeah.
That's been Bullish Banter. I hope you have learned 1 or 2 things. I'm sure you have your own views. We do welcome them. Other than that, have yourself a wonderful day wherever you are. I've been your host, Jesse.
Rufus here. Thank you for listening in.